Hi, this is Naoki Shihara, case presentation for Advanced Accounting, FASB ASC Research and Analysis Case, Consideration on Compensation. The problem I was given is NaviNow company is trying to buy Traffic Eye company. And the question is, should NaviNow account for the contingent payments promised to the former owners of Traffic Eye as consideration transferred in the acquisition or as compensation expense to employees? To answer this question, I found the stated 8 factors. I found this on their Financial Accounting Standard Board website. This is the guideline of the factors considered in assessing whether contingent payment is part of the consideration transferred or not. As you can see, there are 8 of them. The first one is level of compensation. Second one is duration of continuing employment. Third one, continuing employment. Incremental payments to employees. Number of shares owned. Linkage to the valuation, formula for determining consideration, and other agreements and issues. So I'm gonna go over all the 8 factors that I should consider, and at the end I'm gonna show my conclusions. So the first one is level of compensation. Situation in which employee compensation other than the contingent payments is at their reasonable level in comparison to that of other key employees in their combined entity may indicate that the contingent payments are additional consideration rather than compensation. Duration of continuing employment. If the period of required employment coincides with or is longer than the contingent payment period, that fact may indicate that the contingent payments are, in substance, compensation. Continuing employment. The terms of continuing employment by the selling shareholders who become key employees may be an indicator of the substance of a contingent consideration arrangement. The relevant terms of continuing employment may be included in an employment terminates as compensation for post-combination services, arrangements in which the contingent payments are additional consideration rather than compensation. Incremental payments to employees. If selling shareholders who do not become employees received lower contingent payments on a per-share basis than the selling shareholders who become employees of the combined entity, that fact may indicate that the incremental amount of contingent payments to the selling shareholders who become employees is compensation. Numbers of shares owned. The relative number of shares owned by the selling shareholders who remain as key employees may be an indicator of the substance of their contingent consideration arrangement. And below is the examples. Linkage to the valuation. If the initial consideration transferred at the acquisition date is based on the low end of the range established in the valuation of the acquiree, and the contingent formula relates to that valuation approach, that fact may suggest that the contingent payments are additional consideration. Alternatively, if the contingent payment formula is consistent with prior profit-sharing arrangements, that fact may suggest that the substance of the arrangement is to provide compensation. Formula for determining consideration. The formula used to determine the contingent payment may be helpful in assessing the substance of the arrangement. and below is example. Other agreements and issues. The terms of other agreements with selling shareholders and the income tax treatment of contingent payments may indicate that contingent payments are attributable to something other than consideration for the acquiree. And below is example. So, as a conclusion, to answer the question, should Navi now account for the contingent payments promised to the former owners of Traffic Eye as consideration transferred in acquisition or as compensation expense to employees? Although I believe the profit sharing portion should be considered as compensation expense, overall, Navi now should account for their contingent payments promised to the former owners of Traffic Eye as consideration transferred in the acquisition, rather than as compensation expense to employees. And that is my answer. And here's the references that I picked up. One's from, is actually a PDF, Deloitte, and the other one is from the Financial Accounting Standard Board. It was a short one, but thank you for listening.